Good evening, guys. Mic check and screen share check, please. All righty. All right. So yesterday we looked at that little pattern in that was in Robinhood, had an alert set, and it a gap up, and it triggered, and it went, and it traded well, and we used that as a talking points about the kinds of mindsets that you want to have on the team that is preparing and managing and exiting your trade. So we're going to take a look at this little setup for a quick trading lesson. So this is yesterday we took a look at Glenn Osborne's opportunity swing trading. So what he finds are extremely critical states in swing trade patterns, and he's using a weekly, daily, hourly frame with about a 60-cent risk box here in Walgreens, and you can see that it was right in the Kata 2 formation on the daily. Let me come back to that one real quick. So this little box right here is the strong move in either direction, about 60 cents or so. And it's coming at the bottom of a weekly range with a return to the Bollinger Band mean here. So there's the weekly range. There's the size of that little daily breakout inside there. And on the hourly, there's a slight upward bias, and he's got his 60-cent risk box here ready to break in either direction, and his entry is at 47.87 for the alert. That's the alert at 48.87. So here we are. The blue line is the close yesterday, and here's this little green line here is 48.87. You notice that there is a nice tight risk box yesterday that closed, in the noise box, if you will. And then the breakout box for the hourly chart is 60 cents, below that. So on the 1 minute chart, we get the breakout above the alert. So I just buy it, and I just slap a middle of the river on it, and I'm just going to call that my risk and just get on with it. So now my job is to figure out how soon I can get to no lose plus dinner for two, which by my estimate is going to be approximately there. And if I draw a big fat risk box like this twice, I might say, by this time, by one manageable risk box in hand, I have to be at no lose plus dinner for two by then. Does everybody see that? So I'm just basing that on a visual frame of reference. And this risk box here is a fraction of that 60-cent risk box that came out of his hourly chart. Let me see one person nod their head in the chat. Do you understand that frame? My brother, do you understand that frame? We've got an alert above yesterday's high. It's moving out. I had a closing sideways noise channel yesterday. I just took half of it. Got about a 20-cent risk on it. There's a 60-cent risk box for the hourly chart. So I'm 60 cents away from a stop and reversal before it ever even becomes a short side breakout. And then my job is to figure out how fast I can get this stop from where it is to no lose plus dinner for two. And I have to do it not later than or somewhere around that thick blue line when I've got one manageable risk box in my favor if it's going up. But if this thing starts failing, the worst exit I'm going to get, the worst exit I'm going to get is this big fat red line. But I don't want to take that exit. Like, my job is to get out of that before that thick red line. That's just the worst exit I could possibly stand on this one. That doesn't mean I'm just waiting to see because it should hold above that. No, that's a fail-safe, last-minute, last desperate act of a terrified man. My job is to get out of there before that red line if this thing isn't working in my favor. So I want you to hold your pencil in your hand above your piece of paper. And as I start moving this price action, I want you to tap the paper, make an act, and you decide when you're going to move to no lose plus dinner for two. You tell me. You commit to it with a physical act. And then I want you to monitor how it feels after you do that. I want you to write down a couple adjectives, how you feel right now. If I put you into this trade and I said, oh, crap, I got to run to a meeting, so I can't manage this trade. So here's our deal. As long as you exit this north of the thick red line, you get to keep half of everything that's north of that thick red line, the lower one, my 1 hour loss. You get to keep anything. You get to keep half of all the money this thing makes as if my entry was that thick red line. You get to keep half of anything north of that line. But if you let it go below that red line, you owe me money because you're going to pay for this. Because I gave you that much of a buffer to not lose money. In fact, if you exit right now, I will give you half the money of that trade. I'll give you half the money. If you get out right now, I'll never let you trade for me again, but you could walk away with that right now, free money. I won't give you any future ones because you're just taking my money. Now, my brother says, well, I'm giving you free money, Chris. You can have free money. You can have half that money, but just don't ask me to hire you again in the future. Why would I do that? So my brother says he wants to have a 0.8 trailing stop. So I'm going to estimate that as something like that. My brother, is that about 0.8? So your plan is to just trail it with that red box. Is that fair? And then you can override that in the future. All right. So get your pencil ready. You tell me when you're going to take, you tell me when you're going to take the exit. And Chris, when you put the letter X in the box, then you're telling me that's when you're going to exit. And those of you in the sound of my voice, when you're ready to exit, you type the letter X into the chat. I want to see a commitment of action. And then I want you to put the letter Z when you move to no lose plus dinner for two. X or Z. So my brother and Chris are both at no lose plus dinner for two. I will accept that play. Got it. And my brother, you accelerated above your 0.8 stop loss so that you could lock in no lose plus dinner for two, which would be about a scratch approximately. Fair enough? So a bunch of guys are at no lose plus dinner for two. Correct. You passed your test. I'm just going to move on to the next chart. No, I'm not. Now, if that's the case, let's start doing that in our trade cases. My brother, you tell me with the letter X when you're going to exit, or you tell me where you're going to move it, where you're going to move the stop to. So you're going to have a half of a risk box. All right, so let me figure out what that is. That's approximately about that. Yeah, that's about half a risk box. So you're going to be my brother is at we're going to make him the pink line. That's my brother. Okay. Chris, where is your stop? Just below the low of the current bar. Okay, I'm going to make you like something like right there. And we're going to make yours orange. And Maris, yours is going to be green. Fair enough? Yeah, Luis has to leave now because he's in a meeting. So he's not allowed to trade. All right. We're just going to manage 3 exits right now. All right. So all of you are out except Chris. And price has moved back to this blue line right now. Are you still good with your exit right there? All right. So the other two guys, the other two little monkeys, let's say it that way. Took your exits here and are at 0.5 R. No, Chris, you're out, I think. Oh no, you're at the orange line. That's right. My bad. You were the orange line. I thought that was Mars. So you're going to leave it at the orange line. Brother, you tell me, are you going to get back into this thing or are you moving on to the next target? Too slow. Can't re-enter yet. Okay, you've now seen the next bar. Are you going to re-enter? What price do you have to see to re-enter? I'm going to give you the green line And you tell me when to stop when you would re-enter on this next bar. Okay. So like right there, like a universal entry, new high of the day. Okay. Marius, same thing. Yeah, the bar's done. The price is still, it's in a doji right there at the thick blue line. I will, at the close of the bar, because sometimes it's hard to see. The bar is at the, or the price is at the thick blue line. You want to adjust your stop, Chris? I'm betting you want to be just below the bar. Okay. Higher? Lower?
Yeah. Is it okay if, oh, you don't have your cans on.
Below the bar or at the blow?
Chris, he doesn't have on his
Just
ear, so
below?
he can't
Okay.
hear you.
Okay. My brother's back in. That's your half wrist box. Marius is in. The price has moved to here. Chris, where's your stop? Just tell me, I will listen.
Thanks. Yeah, below the current bar,
Okay, so like right there. All right.
a little below. Yeah, there you go.
All right, ready? Bill, I'm taking you at half a box or an 80% box. What do you want? That's an 80% box. Which one do you want? You will follow with the 12 wrist box. What is a 12 wrist box? Oh, half. Okay, half. Got it. So you're the red box. All right. Price is now there. Your stop is the pink.
I would have been stopped out
I don't know. If you want to out, I'll give you
if it was
out.
a little lower. Well, I don't want to be
If
out,
so,
but
I'm
want
gonna
to be
leave you
honest
in.
about it.
I'll leave you in. Or you got to tell me if you want to get back in.
Actually, I have a question. What is
Sure.
the ad criteria?
We're not worried about ads.
Okay.
6R in hand with momentum. That way we're not thinking too hard. 6R
maybe
momentum. 6R with momentum.
Maybe move my
Because-
stop down just another point.
Yeah, you must have been right there. Okay. So I'm going to keep you in.
Thank you.
I'll keep you in. And my brother, that's where you are. Chris, right there.
Yes, please.
One bar low. Brother, box. Okay. Everybody's out. Okay. So, off of this first box of a 1R risk, some of you got about a 0.6. Then on the second one, Bill, you got about a 0.5. So that's about 1.1. Chris, you got this one. You got 1 and about 2. That's about 2R. Do you want the 1, 2? Anybody want the 1, 2, 3 entry? Okay.
I'm thinking it's going to go down, so I'd rather
So
enter
you're not in.
on a short. Yeah.
So you
not
want to
on the
be.
long side.
So where do you want to be short at now? I'll give you the top of the bar. I'll give you the top of the bar.
Top of the bar sounds good.
Okay. Well chosen.
And
How
my
much-
stop will be
Yep.
above the green line.
Okay. Something like that.
Stop and reverse above the green line.
Okay. Any change?
Not yet. Well, now let's see what happens.
Bill? No change. Stop and reverse. Where's your stop, Chris?
There. Well, it's above the green line, so
Okay, you were adjusting.
I'd
So
like
you
to
were
think-
adjusted. So you adjusted your stop higher because the green line was higher. Okay, there's your stop.
oh, you know what? Yeah, you're
That would
right.
make it.
You're
That would
right.
make it a 1.2 loss. So you're not going to do that. So your stop and reverse was actually right there. So you're a little
Okay.
bit in the money. Where do you want your stop? This is half the risk box that we had before.
Oops, bottom of the risk box. In other
Okay.
words, the bottom of the bar. Yeah.
Okay, there you are. Bill, are you at no lose plus dinner for 2 yet? I'm going to say that since you're trailing, the answer is yes. Because I'm your trading robot. Life continues to unfold. It never takes out the previous bar's lows. We're now here. You are well in the money now, Chris. I'm going to assume something like a 1R or a 1 bar low still, as is your
Yes.
preferred.
Yeah. Below the low. Yeah.
Yep. So you're probably right there. My brother's probably with you at the 1 bar low. So Bill, you're holding 1, 2, 3, 4. So you've locked in 3. Chris, you've locked in net 2 because you are at 1 and 2. You've locked in 2, but you're down 1. If you exited now, Chris, if you exited at the top of the bar, you'd be up 2 for that series. If you exited at the orange bar, you'd be up net 1 for that series, even including that stop and reverse -1. Okay.
Gotcha. But I'm going to stay in.
Okay. You're staying in.
I'm going to let the market take me out.
All righty. You're probably out right there then.
I'm out. Yeah.
Yep. Bill, are you out? 4R? Answer yes. Oh, answer no. Okay. You're going to let the market take you out with your trail of a half? Fair enough. Okay, now you're out. And then life continues on. So that is an example of the fractal swing trading pattern from Glenn Osborne, who finds these things that are in amazingly tight spaces. This tiny little box that we set up here was 1/3 of the box that he'd set up for his 60-minute chart, but it was perfectly manageable. And we got a reasonable entry, and we just picked the middle of the Bollinger Band mean from the close, which was all, this was all sideways chop, no signal. It broke out. So we just anchored it to the bottom. And we said, that's my manageable risk box. It is much less than the 60-cent risk box that Glenn had set up. And I want you to just remember where this trade was from. This space from the green line to the red line is 60 cents, maybe, even 70 cents. And we picked essentially a 20-cent risk on that symbol, which is 0.5% on Walgreen. And just in the noise of that first hour's worth of work, you guys pulled out either 5R, my brother, 3.5R, Chris, and who knows how much else more there was. So that's one of the follow-through trades from yesterday, where Glenn framed 5 charts for us to look at that all had that same kind of quality, extremely compressed on the hourly and in critical states on the weekly and daily and hourly. That is stacking up the critical states for the exploded spring tension. So I was reading today in a physics book about the meaning of the words work, energy, and power. Work, energy, and power. So work is moving an object through time and space and distance, right? Power is how fast you do that. Energy is what you do it with. And there's a difference between the potential energy in a situation, the possibility of doing work that is embedded in the context, and kinetic energy, which is energy that is actually being used to do the work. So 2 examples of potential energy. Number one, it could be that because of location, you are in a gravity well, like at the top of a hill. Like you're at the top of the hill. That's potential energy in that red dot. If something nudged it over, it might go, whoa. And all of that potential energy, which is embedded into its location in a gravity well, gets converted to kinetic energy that's actually doing work. The amount of work it does is moving that price from here to there. The power of that move is how much work it does in a measured amount of time. So there's a lot of power in this because it moved a long distance in a short period of time. Oh, there was as much power as it took to move it up the hill in the same short period of time. And then it moved down the hill, and then it moved up the hill, and then it moved down the hill. You can see that it's running out of power because it's taking longer to move half the distance that it did on these power strokes. 1, 2, 3, stalling, losing power, less work, running out of energy, and it is settling around the VWAP, the volume weighted average price, turns out to be the axle, the pivot point, if you will, around which work is being done with energy. So one of the ways that you can identify potential energy is by identifying where in the gravity field it is. And you can see that after an extraordinary move that has culminated. There could be another leg like that up because that's how much power there was in the guys that were buying it. That's how much work they could do in that amount of time. Or if the other guys come on board, there's enough power to move it all the way back down. The other place that you can get potential energy is energy that is stored inside a coiled spring. Oh, guess what we have here? A coiled spring, a Z3 pinch, darn near a super pinch. That's only a 20-cent box. That is the latent power in a super pinch. It's a coiled spring. All of this energy of not moving is just tension, 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 bang. And so that, just that sequence from there to there is about 4 to 5 R on one of Glenn Osborne's carefully framed critical state opportunity swing trading frames. He put 5 of those into the chat room last night. He did 5 of them over the weekend. The same way Ken Hum frames a dozen trades just like that on the weekend. They're doing all the work. They're finding the potential energy that's embedded in these trade frames. Potential energy is stored power, stored energy, ready to do work when released. All it took for this to reverse was to nudge it down over the hill, and it fell. All it took to explode out of here was to release the energy that was in the coiled spring. It released, and then all of this moved to the downside, compressed it into a tiny little 1, 2, 3 package right inside here. Same little coiled spring releases, and it went almost as far as it did before. So think about work, power, energy, potential energy, and kinetic energy. So when you're looking at trade frames, you are looking to identify potential energy and then estimating how much work could be done and how fast. That's how much power things have, is the ability to do work, to move price in a given unit of time. And we're using these norms to tell us what the statistical normal and abnormal moves look like.
Can I ask a question?
Sure.
Go back, please. No, the one we were just on. Okay, so the high there, the first high we got to, that peak, when it rolled over and declined, you just kind of went and life goes on until we got to the bottom. Was there a reason that we weren't entertaining going short there?
You could go short if you wanted. There was nothing holding you back on that. There's a good reason to be interested in going short, but I don't have a pattern on that, do I?
That's not a 1, 2, 3.
The 1, 2, 3 entry would be down here. A 1, 2, 3 entry is an entry formation. It's not a pattern to trade. It's simply a location.
Okay.
The only pattern that I see in there would have been, hey, this thing was up at a previous Z3. Here it's crossing Z2, and now it has entered Z1. If you were going to make a Z-score trade, then that is a pattern. It's not one of my favored ones. This crossing of the VWAP is the first pattern that I would recognize. But I look at that and I say, well, my stop would be up here and I don't see 2-to-1 on a return just to normal. I got my whatever it was, 2 or 3 R. And why do I want to short the most powerful mover out of the stack of things that I had? The power of this thing was to the upside. And then this is just everybody getting out of their positions and nobody buying it. That's not people trying to punish a short, in my view. That's just a bunch of guys cashing out their wins, and it's going to fall back to earth into the yellow zone. So that's not a high priority for me. What's a high priority for me is, hey, where's this thing going to hold support at? Oh, it held support right where the breakout started. Now I'm interested again, and I see the VWAP above me, and I see a rising Bollinger Band mean, and I see a rising 270. That's a reason to enter with a 1, 2, 3, because there's a pattern there. That's a kata 2, because now where you guys are entering is after a reversal in the RL10 and it's rolling up. I don't care whether you get into it here or here. That's a kata 2 or a continuation on a 1, 2, 3. I recognize that, but the immediate stop and reverse, I'm not getting short just because I got out of the long. I don't have a reason to get short. I'm looking for just my patterns.
Okay,
I'll let it,
thanks.
okay. So time, will, pattern, and money. There's time for the trade. I may, if I was in the zero state, maybe, but there's no pattern that I recognize until it gets way down to at least here. And by that time, there's no pattern because there's not a 2-to-1. But this one is a pattern I recognize. It's a higher low, 1, 2, 3 entry. I could get long here with a stop at the bottom of the dragon. That's a formal kata 2 with a PSAR flip. Getting long not later than the VWAP is a pattern of mine in advanced day trading. But in terms of the foundations, that's the soonest I could get in would be about a 1, 2, 3 at that where that green line is.
If that pauses at the green line and then continues, Chris, then you got something, because that was a line of support that was clearly there. And then if it goes below that, I mean, that line of support and known lose post enter for 2 and keeps going, well, then you have that mirror trade where it just, then it's a collapsing dragon and goes. Right.
So this one right here at the big red dot, it held support at the moment where the buyers came in and crushed it north. And then a 1, 2, 3 crossing the Bollinger Band mean after a powerful move up and a VWAP still above me. I can get long anywhere after that big red dot, not later than the big green dot, because it's crossing the VWAP, which is a confirmation that the previous move is continuing. And that time it got as high as the blue line. So I could get long there with a stop just below the belly of the dragon and have 2-to-1 to the blue line. That's a pattern I recognize. I would take that fearlessly.
Thanks.
I like the 2-to-1. I like the 1, 2, 3 entry here, because why not? Because you got about an 8-cent risk box. Like if it goes back into the yellow zone, I'm out of that anyway. So I'll risk 8 cents, which on a 60-cent risk box is already a 0.2 position sizing loss. And I love the green dot because I only got to pay 8 cents to be wrong. But if it works, I get 50 cents to the upside. 7-to-1. All right. Here's one on just a different technique, support and resistance trade. So I've got a thing that I'm interested in. Here's the blue line of yesterday's close to today's open. I'm up here. Let's see if I can draw this one right. Yeah. I'm up here at this moment in the day when it gives me a super pinch on the 1 minute chart. If I was using my full up, the RLCO Bollinger Band mean and use the alert, it says up super pinch. So I look at this and I see 3 boxes or 3 ranges of support. First, there's this one of the last 20 minutes. Then there's this one. I'm looking from the high to the low. There's that range. And oh, by the way, this big black box right here, this one, is the MMRB as defined by a quarter of the minimum range box. So that actually works out to a nice little package. And then I see from the high and the low of the day, I have this outer red box. So when I'm looking at that little super pinch inside my yellow box, right on the inside, that turns out to be half of the MMRB. So how about I get long at the green line? Or red, short at the red line if it breaks out of that box, makes a new low and breaks out of my inner yellow box. So you don't even have to you don't even have to decide, because I'm going to decide, because I'm a chimpanzee and I'm just going to take that trade and you are my fireman. All right. So your job is to save my life. Don't let me lose more than one of these boxes. All right. That's all you got to do is save my life if it breaks out. Fair enough? Yes, that's fair enough. I'm short. Brother, where do you want you're going to get to no lose plus dinner for 2? Does anybody not want that red line as the stop? Okay. I'm a chimpanzee. Screw it. I got markets money. I'll get short at that one. And I'll get short at that one. Chimpanzee has spoken. Chimpanzee's driving. You got to save his life. Guy's a drunk driving maniac. Your job is to don't lose more than that little box. So now I'm not quite at the second entry yet. You can probably see where this is heading. Short. Anybody want the anybody want that? Okay, you're driving. I'm bored already. Out. Oh, there's my green dot. So we'll take that. On that wrist box, that's about 1, 1.5. That's about 2R. Crazy chimp. Visual box trading using support and resistance out of a Z3 pinch and simply using, re-enter under the swing low. You crazy chimpanzee, you. So you're telling me that you would go short here? All right. Okay, you're short. Oh, I'm short again. Forgot to take the exit on or take the second one off. So I got 2 positions in. Crap. Oh, good. Save my life. Save my life. Just above that little shelf. Whew, lucky. Out. So here was one trade. About 2R. Here's one. So that went off. The first was about 1, 2, 3 on the first position, 2 on the second one. That's 5 plus 2. There's 7. Z3 pinch, visual box trading, money management stops, very clean, simple visual display of risk management based on brick size that's geared towards minimum range of the last 30 days divided by 4 as a framing tool. And then using the range boxes from the previous price volatility just by inspection, visual box trading. Visual box trading. It was funny how the $3 stop or the $6 stop was this box up in here. That was kind of funny. This box here, this box, the inner one was $3. And that was the size of the minimum range divided by 4. That's your $3 box right there. Here's one. Z3 pinch. Let me get this framed up here. Breaks out at the green dot. I would take that all day, just like I'm supposed to. It instantly fails, and as it crosses the VWAP, I exit because it didn't work. So I'll take half of the loss. Just get out. Keeps going, get short. When it breaks out of the Z3 box on the other side, get to no lose plus dinner for 2 or something. Do what you want. When it breaks below this shelf, second position. By this time, I should be at no lose plus dinner for 2, like in there. So that is a fake 1. Go to. In the larger scheme of things, that's what that looked like. So all that monkeying around before settled into a tight range compression. When you look at the size of this box in here, that's less than a frog box. That is a Z3 pinch. There's the fake 1. Fake 1. Exit as it crosses below the VWAP, just get out. Keeps failing, get short, add a second one on the break of the shelf. If I'm using the visual box trading, this is what that looks like on the naked. There's the fake 1. There's go to, and that's what you get to manage the rest of the day on 2 positions. You might have gotten out here. You might have gotten out here. You might have gotten out here. You certainly would have gotten out there. You might have even, now it's at 345, so you can't get long there on a COTA 2. But even if you took that one, do you want that trade on 2 positions? Yes, you do. On a risk box of that size, holy smokes. Fake 1, go 2. Get your risk out. Visual box trading. Thanks to Danny's alerts, the Z3 pinch and the super pinch alerts, just vector right in, draw the boxes, ready for the breakout, get my risk out. Don't hesitate, I just go. Trade at small fractions of risk. Trade at a table where you can take the next 1,000 trades, next 100 trades. Play at a poker table you can afford. All right, so here's the, let's see what we got today. So today, yesterday, it pushed to a new 10-day high, 30-day high, very near the fair value. This is a market that was fully satisfied after 2 strong legs up. Micro pullback, still above the dragon, above the Z1. Here's the yellow zone for tomorrow for today's range risk. Here's where it closed. It's off 4.5% from the swing high, which was just north of this at about 481. So still bullish, normal. There's tomorrow's PSAR dot. Here was today's PSAR dot. Everything is north of the Bollinger Band mean. 30-period extension is up. PSAR is up. Hull 3 period is up. RL10 is up. It's up. Today, the S&P was down 0.6. The Qs were down 1.1. The Russell was the worst at -2%. So the Russell was worst at -2. The Qs at -1.1. The S&P was down 0.6. Everything is still in the daily summer, so that's okay in terms of the larger picture. Emerging markets were less bad at -0.28. Diamonds -0.24. Treasuries at 0.78 to the good, above 130. So they're holding on the defensive play. We'll take a look at the things that outperformed first. Sectors. Materials, Brazil up or only down -0.3. First thing in the green is Mexico. Staples basically flat. Marijuana 0.34. VIX 0.6. Oil exploration, energy, agriculture, lithium, clean energy, blended commodities. There's a trend between 0.8 and 1.8. Oil 2.3. The only targets that were really any good today, the metals, which were bad yesterday, had a little bounce today. Alcoa 2.3, US Steel 2.25, Cliff 0.5, Devon Energy flat. Then, I should also say, Microsoft and Tesla didn't lose quite as much as the market. Tesla's still above 1,000, right at that almost 1,100 range. So still looking pretty good. It's on a monthly, summer, weekly. So it's actually right between weekly spring and weekly summer. So it's right on the cusp, but it's a strong daily summer. Underperformers in the sectors, lumber 0.67, finance 0.71, The other lumber, the other lumber minus 1.2, the Fangs, Tech, S&P, discretionary, Bitcoin futures, the clean energy off 1.8, commercial real estate 2.4, blended large cap crypto 2.6, moonshots, biotech -3, Ethereum -3.3. Oh, this one, by the way, this one was XBI. This is that one of the 20 most liquid and most volatile ETFs, which we look at every weekend to see which ones make the greatest intraday traders because they have large relative volatile moves and a ton of liquidity. XBI is one of them. The biotechs move in large 4% steps. So a $4 move is normal. Hey, guess what that was? From 94.25 down to 90.25. That's a $4 move. That's a 4% move. This was an average directional move. And that was just breaking out of the middle of that super pinch. This was an absolutely normal sized move. Wasn't even remarkable. The least surprising size move of all. Just saying. And look at what the manageable risk box does. That's the coiled spring of potential energy that is implied inside of a Z3 pinch and super pinch. XBI, either direction. You know how many true believers there are that are buying and selling biotech? There's true believers who believe it's all hype. And then there are true believers that believe that, oh, that's the future of the world because of medical and genetic engineering and all that. There's true believers on both sides of that, and they take turns winning. That thing was coiled for a long time, and that's what the alert for the super pinch is. So when it alerts, you could quickly drop those frames on there, find out those buy and sell points for the next couple range frame expansions, if you will, which is what we were doing. Standard work. That's an advanced day trading technique from the day trading course. But the visual box trading idea is embedded there in the foundations course. That's all we just did right there. You just get more practice of it in the day trading course. I'd rather that you practice this than take that course, if I'm being honest. My wife would prefer if you took the course, but she didn't hear that. The other sectors that we're not going both ARCs, and there's ARC Genomics that was off 3.6 and ARC Innovation 3.8. So ARC Genomics is trading inside of that XBI sector. So when XBI is down 3%, ARC, which is a front runs a lot of that stuff, is down 3.6. That's Kathy Wood's bets on certain elements inside of XBI. That thing moves just like XBI does, but sometimes a little more volatile because it has people that hate Kathy Wood, and so it tends to be aggressive on the downside. I don't know why they hate her. They just, whatever. People. End the hate, man. Blockchain down 3.8. Global Future of Finance balked 7%. Yay. So that's gonna be ready to rebound. And Robinhood, which crushed it with up 25% yesterday, gave back 8.5. So it gave back 1/3 of yesterday's gains. So do you think those two symbols might have an opportunity to do something amazing tomorrow. I would say all signs point to yes. All signs point to yes. Wonder what that's going to look like. That's balked. Oh, wait till Glenn sees that one. Look at that, was all directional today too. So do you think I would be ready to be short as soon as that one breaks below $5, or I'm sorry, $6.47? You would be correct. Yes. Would I be ready to just instantly go long north of 6.95? Yeah. So I'll just make those an alert for tomorrow as among one of the 50 alerts. That's a paired alert. So that's 2 of the 50 alerts I'll have for tomorrow. If it triggers, boom, I'm on it and I know what I want to do. Do you think I might be able to zoom in on that and build a tighter box like the middle third and be ready to go? Yeah. Like if it moves off of that tomorrow, like if it, I'm going to put another alert. That's so if it opens where it closed and breaks above 655, I'm ready to go long intraday just on a move to the top of yesterday's range. That's a 10-cent risk on a 60-cent move. Ready to go. And then if it breaks down, I'll do another one short if it breaks below the PSAR. And another one short if it goes below the, so I can stack alerts on that thing all day and be ready to play. But those are the primaries that I would look at right there. The power of alerts. Hey, what if it gaps up and goes? Well, if it gets above 750, I'm in on a swing anyway, because it's going to then, it will have cleared all this other congestion, and then it's on its way up to 850, which is $1. That's a 10-hour move from this alert to that alert. But we digress. Where were we? Can't remember. We're probably in the daily, probably ready for the daily reports.
And if you look at that on the daily,
It's scary. Oh yeah.
it'll go to 20.
It'll
Maybe.
just, yeah, it'll just make you sad.
It'll just make you rich.
Yeah. Yeah.
I'm a wealthy miser.
That's right. Yeah. If you just back up. Yeah, this thing was up at 45 once upon a time. If that thing breaks above 9, holy smokes, it's going all the way back up here to 16 and 20. Balked. And you can see by now that what we're really working with is a COTA 2 move that just stalled briefly. So the breakout from those yellow boxes is simply a critical state in either direction. You can easily make the argument why this thing's going to go back up and test this high. And you can see why it would go down and test those. So if I'm drawing my boxes, I'll just draw this. There's your statistical box. And then any breakout from that is an alert. So I've just stacked up a multi-time frame, multi-lens analysis with support and resistance and the different frameworks. Yeah. Above 850, it's adding gas. So that's balked. That's why it's on my target list. What was the other one? Robin Hood. Oh, gee, many crickets. Oh, here's the there's the 10-day range right there. And so if it breaks out above this thing, it's going to go all the way back up into here, right? I don't know if you need anything else. That may be enough for it'll go to 18 or 19 from 14. That's $5. That's a 30% move to the top of that yellow box, the second yellow. But if it fails, isn't it clear that it's going to come back inside this down to around 12 or 13? Sure. So if it breaks out of this middle box, which is the daily range, oh, that is TC2000 auto framing it for me. So it's going to go, if it breaks out of the middle yellow box, it's going to go to one of the other two boxes on a swing trade. Note to self, be ready. Let's see, review shapes. Bullish normal, short-term overbought, gave back a little bit today, still overbought here. This pullback is normal after that kind of run up in the risk Z. Still risk on, abnormally strong, still bullish. We're got a 0.5% of protection against sideways. United Health, Johnson & Johnson, Walmart, Merck, and Diamonds, pharmaceuticals. Lots of dojis today. Home Depot still poised for, it can't stay red like that forever, or can it? I don't know, but that should be on your short list for trade framing. It's right around that critical state of 300. You go frame it. Couple dojis. Oil made a nice recovery. Metals and mining and oil exploration. Very few auto framers because we're so close to the 10-day high. Tons of pinches today. So yellow zone framing, yellow zone trading is the order of the day. There's Microsoft. There's energy and real estate. There's the S&P, Alcoa, and the Dow. Well, that's telling you something. The entire market is a coiled spring. This one is the coiled spring potential energy. So if you want to talk about potential energy, these last two charts, this one shows you the daily squeezes, the coiled spring report. Hey, brother of mine, add that to your newsletter for opportunity traders, the coiled spring report. And then call this one in the auto framer finds things that are at the bottom of the hill and are ready to move back to the top. That's the potential energy at the bottom of the gravity well. So the potential energy report, man, this stuff writes itself. Let me see if XBI was on there. I don't see it on there. Looking. I probably need to add it.
The Dow and Tesla are right there too.
Yeah. That's DuPont. DOW is DuPont Chemical, but Tesla, $6 as the risk box.
$6 on Tesla.
Yeah. Yeah, a $6 risk box on an $1,100 stock. It doesn't matter. It's just the size of the box and the dollars at risk. If it's 2 shares, you're trading 2 shares. If it's 20 shares, it's 20 shares. The architecture and geometry and the math is exactly the same. It's how many dollars you have at risk, and the number of shares is irrelevant. Lots of summer everywhere you look. Merck, Johnson & Johnson, Walmart, Tesla for goodies. Yeah. Defensive plays here. Treasuries with their 1 day of joy. Energy making a little recovery. Okay. This is such a natural, normal resting spot. That sell-off was so trivial that you got to be ready for that as a breakout in either direction. That's the zero state embedded inside the larger move. The slope is telling you all the story. It's slightly higher than Z plus 1. It's made a nice move with respect to the 200, and it's a natural pause. This was as good as it got the last time it went to this is when it went to the all-time high. And the steepness of the upward move is pretty close. I mean, it's only 4% below. So there you are. The 10 is rolling over. It was rolling over yesterday, so we should not have been surprised by a little pullback today. It would be normal for that to come back to the 0 line. Every other time that it did, look how far this time it came back to here. This time it came back below the 0 line. This time it came back below the 0 line. This time it came back below the 0 line. So this time when it comes back, are you allowed to be surprised if it goes back below the 0 line? No, that means it would come back to about that far, 440. That would be the least surprising move. And we're only one day into the pullback. That's the argument for the frame to the downside. I'm ready to trade that one in either direction tomorrow. It's at a natural turning point, and I'm going to be ready tomorrow to be short intraday. I'm ready to be long intraday if it breaks north of today's. That's what a critical state does to you. You don't care which direction. All right, let's take a quick look at the boys trading today. Today was a tough day. We're going to go through that pretty quick. There was not much range and there was not much follow through. There's still a reluctance to cut your losses and a willingness to just waiting to see. Maybe this is the bar that it's going to recover. Get that out of your head. If that trade does not go in your favor right away on WMB3, Wojcik, get out of the trade. You're letting it go to an average loss or beyond when it showed zero evidence of working in your favor. That WMB3, you're trading inside the noise. You got to get out of it if it's not working for you immediately. Get out. Trying to find the charts. All right. Let me give Tim put a lot of work into this, so I'm going to give that the respect that it deserves. Here's what you need to know about Tim. If Tim is putting this much work into studying his paper trades, how do you think he is going to trade when he's got skin in the game? I don't know, because I haven't seen him trade with skin in the game with dollars at risk, but I'm getting a sense of what I think he's going to be like. I think he's going to be meticulous and careful. That's what I think. Anybody want to take the other side of that bet? Didn't think so. So he's noticing, and should be, these lower highs. Right from the opening, this could have been taken. This would not lose money. This is a good SSC. Gets paid. Re-entry on a 1, 2, 3. I think the second entry is premature. Oh, no, I'm sorry. This was short. This was a stop and reverse and got paid. I don't know why that's a scratch. I think that should be a win. Those look like 2 wins. This one on the long side, that's a great exit. That's how you get out of it. This re-entry might have happened here, but that's still pretty close. You got it before it fully crossed the VWAP. You got out pretty well. Great short. On this one, on those range expansions that end in a doji and starts to roll up, I'd like to see you get out here instead of there. Make the most of that move. This one rolls over and he's trying that short below the belly of the dragon. I like it, but this is waiting way too long. Way too long. like you got to get out here. And then this becomes an entry, 1, 2, 3 entry and crossing the Bollinger Band main. And then this should get paid somewhere exiting in here after the maximum favorable excursion. The owl short could have been done. You'd have exited and then you would have re-entered. So that's good patience. I like the short. I want the exit to be here and stop and reverse there. And I think you might have. So that's pretty good. Yeah, this was such a chop that no matter what you were going to do, this was not going to be big wins or losses in either direction. This is one, I think, when you look at the previous, this is one where you could have been short right from the get-go. I think, I'm trying to remember, was this Griff? Good effort, great scratch. Good effort, great scratch. Opportunity, especially here when it goes from spring to fall and a new low has cleared all that potential. And then if you'd seen that, which is a Z3 excursion, you'd have to get out here. So that was the potential trade from here to here. This was a little slow. That's where the entry should be. That's a good exit. Notices this. All pretty good. Think about that one. And then because he keeps firing, he decided this time, instead of taking the one that failed 3 times, he was just going to wait for confirmation. So he gives, so if that's the execution R, he gave up 2R in order to be sure. And then that pays for a lot of stuff. And it goes right to the VWAP, which is the least surprising move of all. I think this is probably the standard risk box. So that's probably 2, which pays for all of this. They all look the same leaving the river, or leaving the train station, I should say it that way. Luke did as good as you could get on a crappy day in the Aussie for 2.8. Rolls over, lower high, good short. After this much favorable move, you gave back that much and kept this much. At least you didn't lose money. And this one on a risk box here, that was 1R in your favor 4 times, we scratched. Ay, 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 ay. So that was potential of +2. This entry short was late. Good stop and reverse. Lucky. Well, it's better than that exit. Good re-entry, got paid, good short, good scratch, good short, great short. You know, I don't mind this one. It's kind of going into this little compression triangle, and then you waited to say, okay, you were given it a chance to break down. That's fine. We stuck around a long time on it. This is one that it went in our favor, then we got to scratch, 2-bar low, and we waited this long to get out of it. Come on. And then that's where you got to be short, not here. And then you gave back all that. Yikes. And then you reset your brain and got paid for 1. A green day at work is a good day at work. That's okay. Yeah, it was Griff's work, crushing it. 3 losses for minus 0.6, 1 win. So he only had a 25% win rate today. The difference between Les and Luke today was that one. That's pretty, except you got those. Pretty good scratch. I'd have been really tempted here, but that's good. It'd have been good patience if you got this one. 48th hour of the fast today. Man, I'm starting to suffer. That's the hard point. So 1, 2 in your favor, and we only kept 0.1. Only kept 0.2. When at some point we were at 0.8, both of these were above average wins that we kept a sliver on. So we got to do better than that. This one rolled over immediately. So get out here. Missed the one that pays, but we did take the worst one. And then we stuck around way too long. You're waiting way too long on the ones that aren't working for you. The entries are mechanical on this thing. The exits are discretionary. We're training the discretionary exit. Like, right here. If you were trading my money for me and you let this become that, we'd have a talk. Let's not do that. All right. So let's not do that. Let's do something else. Because that's what's making this happen. This is, so this is Glenn with today's contribution for the supercritical state. Let's see what he's offering us. Big up, big down, back to the midpoint, and a nice tight, strong, and a rollover into this tight little risk. And there was enough of a roll up 1, 2, 3. That would be a 1, 2, 3 entry tomorrow. And notice this has held as one good first surge was above this one. So he's ready to get it here or there. On a 5-minute chart, I'd almost be ready there, if I'm being honest. I'd be like that on a 5-minute, ready to go, because I can see 1, 2 just to the top of his hourly frame, and I bet you that I could manage a $4 risk on this thing. I bet you. So, and then if this breaks down, look out below, because all of this stuff has no support. It's going to drop like a rock. And it already has once. It went from 300 to 250 minus $40. If it did minus $20, it would get to 35, which is here. It could do that in a hurry tomorrow. So I'm loving me some CAR. Put your alerts on it. Be ready to pounce. Thank you, Glenn Osborne. I am looking for your master class on this, Mr. Master Musician type, meticulous framer, trained on the keyboards. Go buy his albums on Amazon. They're beautiful. All right, that's everything we got for today. Sorry for the digressions.